MTN sells Botswana unit as part of $1 billion asset sales, even as the company plans to list on the Nigerian Stock Exchange this year. Witness in Shell ENI Nigeria trial withdraws draft accusations. Plus, the Organization for Economic Cooperation and Development lowers its 2019 forecast for global economic growth to 3.3%. A very warm welcome to you. Thank you for joining us on Business Incorporated. I'm Chimezi Obi Iwagu. First, the markets, and it was a bit of a mixed sentiment seen here in the markets here in Africa as Nigeria and Egypt gain at intraday. The EGX 30 in Egypt was up 1.35%, while the NSE index was up 0.07%. On the flip side was the market in South Africa, the JSE index, which came down by 0.11%. Kenya closed in the green on Wednesday. In the Middle East, all the markets were in the red at intraday. Dubai stocks fell when its property firms declined, while bank shares hurt the Saudi market. Saudi Arabia's index was down 0.43%, while RG Bank shedding 1.2%, and the country's largest bank, National Commercial Bank, declined 1.5%. The Dubai index lost 1.20% as Emma Properties fell 1.8%, and Demac Properties dropped 1.4%. Dubai stocks have rallied this year, lifted by strong fourth-quarter results from its real estate firms, but property prices are expected to decline further. The Qatar index lost 1.04%, trading at its lowest in 5 months, and was pulled down by its blue-chip financial stocks. The Abu Dhabi index fell 1.26%, with its largest lender, First Abu Dhabi Bank, dropping 0.8%. And over in Europe now, shares moved lower in the morning ahead of a European Central Bank rate decision. The European Central Bank is holding a monetary policy meeting today. President Mario Draghi will address the press at 1:30 p.m. London time. There is also strong focus on politics. The Italian government said it's looking to join the Chinese Belt and Road Initiative, and the future of Brexit is still uncertain. Well, let's bring in my colleague in Frankfurt, Ulrich Bartz, to tell us more. Good afternoon, Ulrich. Another beautiful day to you.
Same here.
Right, the Organization for Economic Cooperation and Development has slashed the 2019 economic forecast for developed countries, just as the ECB is meeting today with the chief Mario Draghi, expected to cut the region's GDP outlook as well. So give us some insights into some of these details.
Well, the OECD lowered its forecast basically for the whole developed world. When you look at its forecast for the world economy, it went down to just 3.3% for the year. And for Germany, it halved its forecast to just 0.7%. And even worse for Italy, it was projected to grow. But now, with a new set of parameters, it's seeing a recession in Italy, 0.2%. For the year, and for the Eurogroup, also a major downgrade from 1.8% to just 1% for the Eurozone in this year. That's expected to be the same kind of message that Mario Draghi will be delivering when he starts talking to the press at 2:30 our time. That's just about an hour from now. And that means that the forecast for GDP will be lower than before, and inflation probably also. And that will most likely also have a direct effect on the pace of returning to any sort of rate hikes. A lot of people here in Europe are in agreement that now the first rate hike from zero for money that the ECB lends banks will not take place in this year, but as the ECB has been telling us so far, but probably in 2020.
Now, today's ECB meeting will be the last before Brexit's nasty deadline of March 29. What is the position of the ECB on Brexit, and are you expecting any change in stance or outlook?
Well, it's clear that, like most anyone else, the ECB doesn't like Brexit and believes that it's a threat to the economy. And it has, at the beginning of the week, announced that it has made some provisions in case things go to a no deal and there should be turbulence in the market and business between banks come into trouble, perhaps similarly as in the case as it was over 10 years ago when Lehman collapsed and interbank business basically came to a halt, and the big central banks had to step in there. And that's what the ECB has made an agreement with, together with the Bank of England, in order to ensure that currency swaps continue to be made. And they've also asked banks as supervisors, the ECB is also a bank supervisor here, to provide contingency plans for the different types of deals that are expected. So it is prepared, and I talked to an economist about these preparations just before we went on air, one who works here and knows the ECB very well. And he says that, you know, like in the year 2008 in September, it's likely that if it comes to any sort of big disturbance in the banks, it won't just be contained to the Eurozone and Britain, it'll likely be a worldwide problem. So it won't just be the ECB and the Bank of England looking out for the economy continuing to churn, but also the Fed and other major central banks.
Well, we'll just wait and listen to Draghi and his team in the next hour. Well, let's look at some earnings coming in today. Germany's Deutsche Post today reported 3% decline in fourth quarter profit, but still paying a cash dividend of 1.15 euros. How well is this national postal service doing in the new age of digital or electronic messaging and so on?
It has been doing really well. You know, it's not just a national post service, if you will. It's a worldwide company. It's actually the second largest logistics company in the whole world. It does business everywhere. And 2018 was not a stellar year. It has had much better years before. But in 2018, there were cost problems. There was a tax problem. So the overall profit and the net profit for the year was down a whopping almost 25% to just over 2 billion euros. But the CEO, Frank Appel, sees a much better 2019 ahead. You know, he already has some figures to base it on. And, you know, we're seeing all these geopolitical issues, crises, if you will, and he addressed that as well. He thinks that the Deutsche Post is very well positioned in order to weather the storms that might be coming.
Well, all right, it's the last one with you for the week. Our election studio, the verdict opens tomorrow for the governorship election. Yeah, it's been a good week with you, and I look forward to seeing Paul next week. Enjoy the rest of the weekend.
Thank you, Noel.
Thank you for your time. And shares in Asia were mixed today following a third consecutive day of losses on Wall Street as investors sought development on the state of U.S.-China trade negotiations. Meanwhile, U.S. tensions with China reached new heights as Chinese tech giant Huawei filed a lawsuit against the U.S. on Thursday. Mainland China shares were mixed on the day, with the Shanghai Composite rising 0.14% and the Shenzhen Composite adding 0.489%. Hong Kong's Hang Seng Index declined around 0.8% in its final hour of trading. Elsewhere in the region, Japan's Nikkei 225 slipped 0.65%, while the Topix declined 0.84%. In South Korea, the Kospi declined 0.45%. Meanwhile, Australia's ASX 200 gained 0.29% as almost all the sectors advanced. The heavily weighted financial sub-index added 0.2% as shares of the country's so-called Big Four banks were mixed. And in the U.S., stock index futures were lower as market players remain focused on U.S.-China relations. At around 2:15 a.m. Eastern Time, Dow futures fell 87 points, indicating a negative open of more than 87 points. Futures on the S&P and Nasdaq also pointed to a lower open. Data on Wednesday showed that the U.S. trade deficit remains a problem. President Donald Trump has imposed a series of tariffs on countries like China in an attempt to bring down his country's trade deficit. However, Wednesday's data showed that trade deficit in the U.S. hit a 10-year high in December. On the economic front, there will be jobless claims and unit labor costs due at 8:30 a.m. Eastern Time, and consumer credit numbers released at 3 p.m. Eastern Time. On the corporate calendar, H&R Block is set to report before the bell, whereas Costco will update markets after the bell. And back here on the African continent, South Africa MTN Group aims to list its Nigerian unit on the Nigerian Stock Exchange during the first half of 2019 without raising new money from investors immediately. MTN Nigeria said it will simplify its capital structure prior to the listing. The Nigerian company's subscriber base grew to 58 million users in 2018, up 6 million. The group has announced its full year 2018 results that reflect a strong performance by MTN Nigeria and comments from management on the Nigerian business. Upon listing, analysts say MTN Nigeria will be the company with the highest revenue on the NSE. Meanwhile, MTN Group Limited has announced the disposal of its shares in a Botswana joint venture as Africa's biggest wireless carrier by revenue kicks off a drive to raise at least 15 billion rand from asset sales and strengthen the balance sheet. The company agreed to sell its 53% stake in Botswana's Moscom to Econet Wireless Zimbabwe Limited for $300 million. Other businesses now on the market include e-commerce services, which includes Nigerian online retailer Jumia Technologies, AG, and Travel Start, COZA. MTN is also looking to sell its interest in IHS Towers Limited. The news comes a year after Chief Executive Officer Rob Shota announced a review of MTN's then 22 markets across the Middle East and Africa to evaluate ways of simplifying the business. The sale of MTN's Botswana interest follows a disposal of its Cyprus unit for 260 million euros. And on domestic commodities market, we will be talking about gypsum. Well, gypsum has great importance in cement manufacturing. It is also used for other demands. At present, cement production is 8 million tons a year, when Nigerian demand is 9.6 million tons. Analysts say Nigeria needs to increase the capacity to meet its needs. Approximately 1 billion tons of gypsum deposits lie in many Nigerian states. Let's bring in Tobiloba Ogunolu, one of the research analysts with financial derivatives, to unpack this. Hello, Toby. Thank you for joining us.
Thank you for having me.
So Nigeria is endowed with massive deposits of gypsum, approximately 1 billion tons, valued at about $80 billion. Yet, it still imports about $37.58 million worth of gypsum. What is responsible for this anomaly?
Okay, yes, the fact responsible for this anomaly are one, lack of funding and investment. So we've seen that due to the fact that a lot of focus has been on oil, then a lot of sectors are still lagging. So for example, the mining industry is still underdeveloped, and mining requires a lot of investment. So this factor has really been limiting productivity. Then two, we've seen that there's been lack of infrastructure, particularly power supply. So power supply is, the industry is also very dependent, mining of minerals is also very dependent on power supply. So this factor has also been affecting them. Then lastly, inefficient regulation in the system. So this has given room for enough illegal extraction. So these factors has been the causes of this anomaly.
Okay, gypsum is a critical input in cement manufacturing. The demand for both commodities is considered as joint. Now, the price of gypsum has remained flat, while cement price has fallen by 4% to about 2,600 naira per bag. Why are the prices for both commodities not moving in tandem?
Yes, gypsum is a joint demand, or it has a joint demand with cement. And what this means is that the demand for gypsum is directly related to the demand for cement. And that being said, the price of cement reduced marginally. It's just about 4%. And this is due to the fact that cement is a very seasonal commodity. So during rainy season, we'll see that the price of cement reduces due to the less construction during that period. And we've also seen that a lot of manufacturers stock up before they stock up for their raw materials, and that is in order to be able to edge against price volatility. So these two factors could be the reason why the price of gypsum and the price of cement are not moving in the same direction.
All right, Toby, we'll leave it at that. Thank you very much for your time. Toby Loba Ogumbelu is one of the research analysts with Financial Derivatives Company. We'll take a quick break. When we come back, OECD slashes global growth outlook, plus update from the Nigerian equities market. Just stay with us.